Hello and welcome to BISP Solutions. My name is Ankita. Today we will continue with the workforce planning module. So today we are going to see the employee life cycle. As we have already seen how we plan to recruit an employee and how it is being recruited. Now we will continue with the employee life cycle, and we will further see how the employee is being transferred, departed and resigned, and we will also validate the payroll data related to the transfer, departure and resignation. Okay, so now let us go to the interface. Okay, now we go to the workforce and then to the compensation planning. So in the compensation planning, we can see that in existing employees, we already have 4 employees with us. So one is the staff Rob, who is an accountant. Okay, so now we will see how the employee is being transferred. Okay, so for that I will then right click on the employee and then click on transfer. So here the employee, we are actually we are having a scenario where the employee is being transferred from entity sales US to finance US. So we will consider here a transfer out. Okay, so the employee is being transferred in the month of November, we are assuming. Then we will launch the rule. Okay, so here we can see the status as transfer out. As and when we see the status here as transfer out, we will go to the transfer section and we find that the employee name is Rob, which is an accountant, is being transferred. Okay, and he is an active employee. Now again I will right click on the name of the employee, and then we see that we have an option of transfer in. So I will click on it, and then directly I will specify the department or entity in which the employee is being transferred to. So here as we have considered that the employee is being transferred to the finance US. Okay, after that, after selecting the department, I'm going to launch the rule. Now there is no pending transfer review. So now I will again go to the manage employee, and then here I will change the entity from sales US to finance US. Okay, now we can find that the employee is being transferred into the finance US entity, and its compensation is 20,000. Okay, so let me recalculate it. So I will first synchronize definition, then synchronized default rule is to be run, and lastly we will calculate the compensation here. Okay, so here we have the total salary with us as 20,000. Why? Because the employee is being transferred in the month of November, so we will be holding the salary for November and December. I will show you this in employee details. So was an accountant, then the stock Rob. Okay, we can see here that the employee salary is visible to us for the month of November and December as 20,000, as it is grade 1 employee, and the default value for grade 1 employee was $10,000 per month. So I'll show you that. For sales US, our grade was, wait a minute, it is going to be assumption. So salary grade we are going to see is 1,20,000. Okay, 1,20,000 is for an annual basis, is a salary on annual basis. So it is 10,000, 12,000, 1,20,000 divided by 12 months will gives us $10,000 each for each month. Okay, so now I'm going to validate the data or the sales here. So now I'm going to the employee detail. I will specify the employee and its job. Okay, so here we can find that the employee started its operations from the month of October, 1st October 2023, and after 1 month the employee was transferred to finance US department. So the employee has actually drawn the salary from sales US department only for the month of October. So let me expand this, and then we will be validating the data for the same. Okay, so here we will enable the editing, and then we find the salary grade here is 10,000, as I have already shown you before. Basic salary, $10,000. Here I will be keeping the screenshot of the same. Okay, so we will be considering the grade 1 employee. Okay, so here it is going to be 1,20,000. Okay, so per month was 10,000. Then comes our accommodation allowance. Accommodation allowance, which is 5%, which is 5% of the basic salary, right? So here I will be calculating it on the basic salary at the rate of 5%. So we will get $500 only for accommodation allowance. Then comes the responsibility allowance. So our responsibility allowance was a flat value, which is $500. So I will just directly mention it here. Then we have the medical contribution. So our medical contribution was 15% of the basic pay. Okay, here we can see that it is 15%. So medical contribution is going to be 15% of basic pay. So we got $1,500. Then we will be having the staff provident fund. So staff provident fund is going to be 3% of the basic salary. Okay, so here we have the staff provident fund. Then we have the federal income tax. So the federal income tax is going to be the sum total of the basic pay plus accommodation allowance plus responsibility allowance and the staff provident fund, which will be multiplied with 10%. Okay, so we got the federal income tax, which is $1,130. Then we have the state income tax. So state income tax is going to be the 12% of the salary. So here again we are going to consider basic pay, accommodation allowance, responsibility allowance and the staff provident fund for the calculation of the state income tax at the rate of 12%. Okay, so here we got the value of the state income tax as well. So here we have the data for the sales for the accountant, and hence we have validated the data for it. Now we will go to the employee detail, and in that we are going to see the salary of the transferred out employee for the entity finance US. As the salary the employee will be withdrawing in the finance US department from the month of November. So the job was accountant and then the employee name was a staff job. Okay, so here we only have the compensation with us. As we can see that only the compensation is being transferred because we need to separately define the default or values of all the benefits, taxes and additional earnings. Then only that that calculation will be seen further. So this is the so this is basically the problem uh, in the application itself. So we can only view here the grade of the salary. Okay, so this is the grade. As per the grade, the staff job is getting a salary of $10,000 per month from November in entity finance US. Okay, so this was about the transfer case. Now we will move forward to the departure case. So now we can move to the entity here. In entity, I will be going to select sales US entity. Okay, so we have the active employees in the organization named Carla, who is a sales associate. Okay, so let me tell you once again how we have defined the salaries in it. So for that, I will first take you to the default values. So here we have given the sales associate salary grade 2. Okay, then we have here for additional earnings we have the assumption as the employees are going to withdraw both accommodation allowance and responsibility allowance for all the job, which also includes the sales associate. Similar goes with the benefit. As you can see, all jobs is assigned with the medical contribution and the provident fund. Then comes the taxes. So the taxes for all the employees are going to be federal income tax and state income tax as usual. Okay, so this is the default values first we need to define. Then after that, we will be adding an employee using the new hires. Okay, so after adding the new hires, then we will associate them with the existing employee. Okay, after associating, we will be getting the values of all the associated employees in the existing employee tab in this page, as we can see, and the salary and compensation calculation are all visible to us into this tab. And if you want to view the further detail about all the employees, we need to go to the employee detail, and there we need to define their jobs and the employee name as well. Okay, so now we assume that Carla, which is a sales associate who had joined the job in the 1st of January 2023, is now being departing from an organization. Okay, so for that planning, I'm going to right click on the employee, and then I'm going to plan depart over here. Okay, I will click on plan departure. In plan departure, I will be going to select the month in which the departure is being planned. So here we are going to take the month as October. Then we have two options over here, that is action is the departed and resigned. So here we'll be considering departed, and then launch the rule. Okay, now I will click on OK. So you will find there is a change in the salary details. So we will view this in more detail in the employee detail. So I'm going to select the employee as sales associate, job as sales associate. Employee name is Carla. Okay, as we have already previously mentioned that the employee is departing in the month of October. So from the month of October, we don't find any calculation of the compensation. We only have the calculation from the month of January till the September. Now we will be going to validate the data for the same here. So that I will transport it to, export it to the spreadsheet. Okay, so here we are going to calculate the salary for an employee only for 9 months. So here we have the basic salary, which is a grade 2 employee as 15,000. So for clarifying that, I will take you to the assumption page. So being a grade 2 employee, the employee was withdrawing a basic pay of 15,000 on a monthly basis. Okay, we can view this over here. Okay, now I will be going to perform the calculation to validate the data for the same. Basic salary grade 2 was 15,000. Okay, after that accommodation allowance was given to the employee, which was at the rate of 5% of the basic pay. So here basic pay will be multiplied with the 5%. So we got $750. Then comes the responsibility allowance. So the responsibility allowance is flat $500, so I will just mention it here. Then we have the medical contribution. So the medical contribution was 15% of the basic pay. Okay, so here we are going to calculate this on the basis of the basic pay at the rate of 15%. So we got 2250, which is $2,250. Then we have with us the staff provident fund. The staff provident fund is basically 3% of the basic pay. So the basic pay is 15,000, which will be multiplied with the 3%. Then we have the federal income tax calculation. So federal income tax is being calculated on the basic pay plus accommodation allowance plus responsibility allowance and then the staff provident fund. We have already considered that the medical contribution is not a tax component, so we are excluding it in the we are excluding the medical contribution from the calculation of the tax. So federal income tax is at the rate of 10%, which is $1,670. Then we have the state income tax, which is 20%, which is 12% of the basic pay plus accommodation allowance plus responsibility allowance plus staff provident fund, which will be multiplied with 12%. And we got the value here as $2,004. Okay, so this was the monthly calculation. Okay, now we will be doing the yearly calculation. So here I will multiply 15,000 within 9 months here, so we'll get 1,35,000. So here, which is the exact value 1,35,000 mentioned here. Similarly, I will be multiplying this for all. Okay, so I will copy this figure from here. Okay, so I'm only getting it here. So what I will do is I will copy this so that we can easily identify any deviations which we have in it. So we find that there is no deviation, hence this data is validated. Okay, so here we see that we won't be having any calculation from the month of October as the employee is being departed from an organization. Then we can see that we have another employee named Creston Paul, which is a sales coordinator. Okay, so let me show you the employee details. A sales coordinator, Creston Paul. Okay, so here we find the calculation of the salary here for the entire month. Okay, for in the entire year with us. Now we believe that the employee is planning to resign from an organization in the month of November. So I will right click on the same, and then I will click on plan departure, and I will select the month as November, and the action is going to be resigned, and then I will launch the role. Now we can see the status has been changed to resign. Okay, and now the compensation has been changed. So I will take you to the detail. The job was sales coordinator, and the employee is Preston Paul. Okay, now we can see that we have a salary calculation from the month of January to till the month of October, as the employee has resigned in the month of November, so will be no salary calculation from then on. Okay, so now we are going to validate the data for the same as we did previously. So Creston Paul was a sales coordinator, was actually a grade 1 salaried employee. I will take you to the spreadsheet. Okay, again export it. So here we have a salary calculation of Preston Paul. Okay, so which is a grade 1 employee. So basic salary is grade 1, which is 10,000. Then comes the accommodation allowance, which is 5% of the basic pay. And then we have the responsibility allowance, which is flat $500. Then we have the medical contribution, which is 15% of the basic pay. Then we have the staff provident fund, which is 3% of the basic pay. So we got $300 here. Okay, so this is basically what we are doing as a monthly calculation. Then we will move to the yearly calculation. Okay, so now we are going to see the federal income tax. Okay, so federal income tax is going to be the basic pay. So this will be the sum total of the basic pay plus accommodation allowance plus responsibility allowance, and then the staff provident fund, which will be multiplied with 10% rate. Similarly, we are going to calculate the state income tax. which is going to be at the rate of 12% on the basic pay plus accommodation allowance plus responsibility allowance plus the staff provident fund. Okay, so this is what the calculation is, and it's exactly the same to that of the calculation done by the application. So now we are going to multiply this with 10 months. So we are going to get 10, okay, we get $1 lakh. By copying this yearly calculation, I will just copy it from here to validate the yearly data. So to validate it, I will first subtract it and then I will copy it. So what I have done here is we have done the yearly calculation in Excel, and this was the calculation that we received from the application. Okay, and then to validate the data, we just subtracted the data between the Excel calculation and the application calculation. So we got no deviations, and then the data is validated over here. Okay, so this is how the employee's life cycle goes. Now we can see that we have one employee over here, Walker, which is sales of operations analyst, and he had started its job from 1st of January 2023. Okay, so now I'll take you to the employee details here. Sales operation analyst, and here comes the Walker. Okay, we can find the calculation of its salary for the entire year. Okay, so here we have its properties details. Now here we have the performance options with us to calculate its performance. Okay, so just by clicking on this down arrow key, we can give the performance details. So for example, here we are considering that the employee named Paul Walker has given the performance which was above expectations. Okay, so after selecting it, okay, I will save the changes. So after making these changes, we will be finding here there we should get the rate. Here we should get the rate which we are not getting. There is some issue with the application. So as and when we select the performance, we will get the rate automatically here. That is the recommendation merits. On that basis, we will be calculating the merit of an employee. Okay, then on that basis we will get the merit of an employee directly into the employee detail calculation. Okay, so that we will see a little later, and that was all for now. For any more queries, please feel free to ask. Thank you.